It's digesting a little bit of finally momentum here on the Nasdaq on the downside after 8 days of not making a lower low, able to make a lower low, a little bit of follow through, and then a reminder. The reminder being that, well, we have tomorrow Jay Powell out of Jackson Hole. And then also beyond that, we still have every day this week $5 billion of CTA repositioning. They were basically pivoting at the very bottom here on the wrong side. Are they pivoting again on the upside? Depends. When you're trading a momentum, or I should say a trend following system such as the CTAs, you could, during prolonged sideways ranges, get really wrecked. And of course, it works out really well when going momentum is kicking very much to the upside or downside. And on top of that, though, there's another $5 billion a day of corporate buybacks at the bid. So that's a bit of a force to be reckoned with. However, you have to ask yourself, or I've been asking myself, well, if everyone's already positioned long, who is left to buy? Jordan, you just answered that. There's a, there's $10 billion a day this week at the bid. Well, that's true. Even still, it was a nice ride to the downside. A lot of people right now are assuming crash positions. I've seen the sentiment change pretty quickly as we've seen this sharp move up. And true to form, it could be it could be multiple things. We could be looking at a dead cat bounce. We could be looking at nothing more than a breakdown, trend line breakdown, retest. If we resume down, that would be CTM all day long. Or we could be looking at a nice little liquidity grab over here, getting people positioned off sides once again. Well, I guess that was down over here, right? And then so I don't like this TA, first of all. But nevertheless, we're just looking at it and going off of it. I don't like it because it's okay at best. And big shout out to Peter at Game of Trades for saying, because remember we were looking at his TA of the Russell, and I was like, wow, look at this. This is like he's totally got the structure correct here. That's wild. It's rare that you see that. And then Peter was so generous and nice and saying, he's learned a lot from our TA here and really valued it. I you know as as a mentor, as a coach, I value so much seeing when traders are able to incorporate what we do and then have massive success with it. That's the father in me. It's really beautiful to see. Here you see the breakdown or retest going off of this type of TA. And yes, you could have a resumption down, or you could get back into the neutral zone going off of this TA, going into the neutral zone and or a break above. Then that winds up being a big liquidity grab. I don't know what's going to happen. It was nice for me to see finally a lower low over here. I was, you know, beautiful day, glory day. That's all I can say. But you got to, in this type of environment as well, you got to make sure that you're taking profits when going against the grain and going against all of the flows. Dollar is showing signs of also maybe a dead cat bounce. You can see that the dollar here is broken down, important level, hadn't broken since last summer, July, and now breaking down and now coming in for the retest. If you remember last July, the sentiment last summer as the dollar broke down below this trend line, this horizontal line of support, was extraordinarily bearish. I mean, the sentiment was that the dollar is about to collapse. And that fake out took a lot of people off sides and ran pretty hard. For CTM, it was magnificent lesson, and we were able in real time, no, late. The way that I navigated this, by the way, because I was amongst the people here on the technical breakdown, is very bearish. There's no question about it, right? This one also, though most people were bullish, we were able to turn bearish all the way up here, why most people were expecting 120 on the DXY. Often sentiment is quite offsides, but there is a sweet spot when people are all in unison on the right side. And the way that we played that was we waited for a breakout of this yellow line over here. And then on the breakout, that's when we said, okay, that's a buy impulse in effect. And then you saw one retest, two retests, and then the dollar went on. And then we were able to trade both sides over there, setting up the breakdown as well. That was one of the beauty trades of the year when we took out the dollar trade and the selling of the 10-year on that same day. Those were pretty strong exits. Only I saw Bill Ackerman getting it a little bit more fine-tuned and better. But what I learned from this trade, and it's been an invaluable lesson, was that after the breakdown, you could see us reclaiming back into above the support, which for me, that said, okay, back to neutral and neutral in this zone. But you see that this retest of that reclaimed support and then the resumption off, it became very clear in hindsight that that was the correct place to reposition on the long side. And that lesson has been able to translate since then, over the past year now, into other instruments as that occurs in real time. So it was an valuable lesson. I was able to say, well, at this point in time, most people were still bearish on the dollar, and at least we positioned on the right side and exited at the right time. But that's still late. We want to be the best that we can be, and this is an invaluable lesson when you get a fake out or a breakdown that just doesn't have any follow through. And then where it breaks down, if that's retested the other way, that's the entry. So yesterday we had the FOMC meeting minutes, and a lot of headlines were that the vast majority saw September cut as likely appropriate. You could see that the market today is basically leaning strongly towards 25 basis point cut. Not too much of a difference. Then you saw some support, a quarter point cut, and then you have the majority, several participants said recent progress on inflation and increases on unemployment rate provided a plausible case for a 25 basis point cut at July's meeting, which didn't happen, and that they could have supported such a move. All participants supported maintaining policy rate in the current range. Majority of participants said risks to unemployment goal had increased. The Fed has two mandates, and one of them is maximum employment. We know that from yesterday's revisions that the case has been made much stronger that the Fed is going to need to potentially address their other mandate. And then the rest of the rhetoric was pretty much walking that fine line. And I wonder if that's what Powell does at tomorrow's meeting. Many participants said that easing too late or too soon could unduly weaken economic activity, unemployment. Participants observed that recent months there has been some further progress towards the Fed's 2% inflation. However, several participants said reducing policy restraint too soon or too much could risk a reversal in the progress of inflation. So, are we going to come out of tomorrow's meeting? By the way, after not a meeting, tomorrow's platform, Jackson Hole, are we going to be then focused on the data where we have next Friday more inflation data, core PCE, bringing us into September before the meeting? We have two big data points. We have non-farm payrolls on the 6th, and then we have CPI coming out on the 11th ahead of the meeting. Well, I obviously don't have the answers to those questions right now. We do see that we are seeing lots of charts that are really setting up what they believe is not only an immense downside move to come, but also a repeat of what happened in 2007. And then we'll get into that in 1 second. I just want to pull something up, and that's going to keep reminding you all. of not that. Well, that does matter big time, whether or not they're cutting into a recession or normalization. But I'm looking at the election year seasonalities and, September with a sitting president and October could be pretty benign. Now, this is just historical data going back 75 years for the S&P 500. And during an election year on the S&P 500 with the sitting president, it's basically been pretty much flat. We don't have a sitting president though. We do have an open field, and September and October with an open field could be quite a ride. Could be quite a ride. We have nice ride to the downside, right? And that could let me just get that into view. That could be in play. And then you could see normally during September, October, um, you're just running flat over here. And all election years is just slightest drift up, but kind of flat. So is that what we're headed for? Why a lot of people at this point think we're ready for some extremes, extreme to move to the upside, extreme move to the downside. Are we going to see just a drift? Are these a lot of people expecting that big downside move now? And that could change tomorrow. And then tomorrow we could see all of those fractals that are pointed to like this bubble hasn't even begun yet, you know? But, would max pain be I noticed that like often a lot of people they do have the outcome correct, but it's the timing that really they usually get wrong and kind of are expecting results too soon. I don't care if you're thinking on the upside or downside. Usually, the precursor to big moves also entails a little bit of fake outs along the way, and you can even see that occurring on a very micro scale today. And you could see yesterday's FOMC meeting minutes. It sent off a continuation of this move that we've seen going on now for a week and a half on the Nasdaq. This morning again, running in the green, and then boom, the rug pull to the downside, finally coming in. And then again, little follow through as you came into this area of support. And why? Well, there's a lot of there's a lot of uh, there's a lot of funds out on the bid here today. I'm trying to set up something. And yesterday we were talking about the similarities between 2007 at this particular point in time, including we were talking about S&P or Nasdaq S&P 500 making new highs in July, Fed cutting in September, and then all of a sudden the floor falling out. Now we have Sven talking about how yields are also dropping hard right now as the Fed gets ready to potentially cut rates in September. It looks like the Fed's getting ready to cut in September. It doesn't mean that they will. We still have a few weeks out, and we could see a Charlie Brown moving the football. We'll find out. And then Sven is just making a joke, and he's pointing. Well, that's not now. That was back in 2007. This is now, and it looks pretty similar. The one thing that's different between now and then is back then quantitative easing and was not part of the tool bag. And it's my interpretation that the Fed is going to extend the cycle as far as possible. Right now, we have quantitative tightening running. There will come a point in time next when first the cuts come, then quantitative tightening stops, and or at the same time, we begin to see some type of balance sheet expansion once again coming out of the Federal Reserve. Is probably going to be more than a little while before they're able to unleash QE once again and return to outright easing. But you never know if the markets move towards something like that calls for a panic cut. Well, at that point, then the race becomes to get yields down to as low as zero as possible. I think I had up a little chart over there. Sorry about that. Thank you, Craig. But what I was showing was this chart over here, and Sven talking about. I was laying out what's going on now between the S&P 500 making those highs in July, and then the Fed cut coming in September. And then he's also pointing out the price action here, mentioning yields dropping suddenly. And we do have right now, yields has been dropping down. Notice, or what I'm noticing, that as the dollar, we looked at the DXY coming back in for a retest. The 10 year is getting ready for an underbelly. It's coming in for a test now off of a lower high. So if it breaks above this line, that's an underbelly breakout. And that would suggest to me that we are testing up above 4%. So that's what I'm watching. A lot of people right now, pretty late, are now focusing on usually that's what happens. People once people start focusing on things, they're usually a little late. But from zooming out perspective, I just want to point out that I believe that we are over here somewhere in this area of 2019. And this is setting up, right, as the cuts begin, some further downside momentum. I don't think that, and then again, then you had this nice little continuation bear pattern develop, which is quite bullish if you're investing in yields. And then the crisis led up. You could see that this has been prolonged for a while. Do you think as they cut, if they were to cut in September, then throughout September, October, we're going to see a retest of that bolded line? I think so. That looks like that's a pretty good awareness to have. If they don't cut, do you think that we're going to get this underbelly breakout and be testing upwards over here, potentially even back into the big one? I do. I shouldn't have said that without confidence. I do. All right. So just painted a picture of what's going on. And don't forget, the treasury still has the potential here to intervene in the market. There's still $320 billion inside reverse repo. And if they want to come out with heavy new issuances into the end of the year, that is supportive of risk. And the ticking time bomb continues ticking, but at a pretty slow pace right now. Before we get into Bitcoin, and I want to get into Bitcoin, let me just talk about what's going on here with the markets. And I just want to point out FNGU, because FNGU earlier this week took a long position and then took a quick and small stop loss. So, I mean, just look how well this was timed over here. And you could see the position long and then taking a nice little very small stop loss, break even basically, and then out on the sidelines as prices come off 5%. You love to see it. You love to see the moat just kind of navigating so well. And there's also of note that FNGU here, which is, comparatively the weakest. If you look at CTM stocks and you look at FNG off 6% today, NVIDIA only off 2%, and TQQQ only off 2%. You notice that TQQQ entered well before FNGU. So you could see the relative strength and the relative weakness that was occurring in the market. There's a good read on that, or it is useful to get a read of relative strength and weakness. And then you could see over here still holding this position right now on both NVIDIA and also on NVIDIA and TQQQ, both holding their recent longs. Tesla taking a stop loss on its last entry, taking a tag over here for 1.8 stop loss. And true to form, right? What's the win percentage? 38%. Expecting that at least 6 out of 10 trades are going to end up in loss, not where most people think every time they enter a trade that it's going to be a winner. The healthy mindset is to just think, okay, my win percentage is this, so my expectation is this out of 10 trades are likely going to end up in a loss. Don't even think of the wins. When the wins come, they hang on. And you can see the average trade here, 10.8% to the average losing trade, 1.72. You're looking at a greater than a 5-to-1 risk to reward. A lot of people would be so happy if they could trade with a 2-to-1 or a 3-to-1 risk to reward. This tweet over here says, Long-term outperformance comes from sidestepping major market drawdowns and bear markets. The lessons from 2000, 2008, and 2020 are clear, and then goes into watch like imagine having to discretionary get that right. Yeah, it's nice navigating 2000, 2008, and 2020. 2022 was also a bear market that's not incorporated. Look what's happening here on buy side only stocks during that particular point in time. You see the flat line? Just out of the market. Yes, sidestepping major market drawdowns and bear market. Absolutely priceless knowing when to be out of the market. Oh, nice trade. Boom. Out sideways, sideways, sideways. You could see it happening on FNGU. You could see it happening. Well, Tesla was executing off the short side very nicely, and Nvidia also executing off the short side. So beautiful, beautiful stuff all across the board. Yeah. So this is some good wisdom. So I'm gonna highlight it. Just got to trade the market. We got a lot of people massage the chart or the data to fit their confirmation bias. It ends up costing people fortunes. You remember in 2022, we spent so much time like not only building in 2022 is when our mechanical systems were born, but we also spent a great amount of focus of completely removing our bias because it doesn't matter. It only gets in the way. Once you're able to trade what is happening to stay on the right side, at that point in time, it just makes the whole thing a beautiful, beautiful dance. So let's take off and we'll continue over here with Bitcoin. And Bitcoin here is still ranging. And you can see the structure of the market, right? You can see Bitcoin ranging in this area. Likely the next outcome, I mean, you have the light one over here as well, but likely this coil, and we're dealing with, right? A major, major coil. You can see it from here. Market's been coiling here since mid-March. We know that contraction leads to expansion. Markets are setting up a big move, and we don't know whether or not it's going to be something like I thought I had it set up beautifully here, and I just off on one. So we don't know whether or not that the stars are going to align, and we're looking at another couple of months, another 2 or 3 months of consolidation before we start getting some nice up moves. Noticed in past cycles though, notice that not before the breakout where price started exploding, you had a nice run up in both occurrences. So a run up, if that we were to seeing any type of price behavior showing any type of similarities, that could be beginning any day into the breakout and then watch there above. By the way, I don't like y'all know the third party risk, and it's incredibly difficult to mention any type of exchange within the space and or broker and or third party. So zero type of endorsement, but I did notice today that Unchained Capital is offering uh instead of their setup fee of $995 to set up an IRA, could either be a normal or a Roth IRA. They are charging 21 cents um with code August IRA. There's like a $250 yearly fee as well. And the thing about Unchained though is that you hold your keys. So I feel a little bit better mention. I mean, imagine you have you have to secure your own retirement funds. You are responsible for storing your keys. Obviously, through Unchained, they use multi-sig. They're holding one key. You hold the two other. The two keys you hold are not in the same geographical location. Please be very smart and give a lot of thought. I'm just highlighting this in case you want to look into it a little bit more, and then you could go on forward. Um, boom, 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 boom. Bitcoin continues to coil in not only this elongated range over here, but also now in this very tight range. Likely a move. The next move likely is either coming towards the bottom of this area or the top of this area, and is likely keyed off by a breakout above this structural line that I'm highlighting right here. So above 62,300 or below 56,800. And both of those are sloping slightly upwards. We know that we just entered on the long side on Bitcoin, just currently holding that trade at break even over here, up 1%. And that also has reset now the ability to trade the short side if need be. If we see a break to the downside, then we have the opportunity for an entry potentially. We're holding long over here right now. If we get the breakout above, we saw that beautiful exit by Ethereum on the short side, taking a nice profit, sending Ethereum back into roaring in the bliss here, just like off new all-time account highs by a percent and a half. Michelle was noting that he took that CTM 2.0. Did it take an entry and was stopped out? I don't see it over here. This was on the 21st, took an entry on the short side, stopped out. And I'm just going to highlight and remind everyone that it remains, I guess, a little bit like subjective about whether CTM 2.0 on the upside outperforms CTMX on the buy side, because there are certain points, at least in Bitcoin's history, where during the hype phase that you see CTM 2.0 outperform. During each bull impulse, the performance is pretty close to each other, and it's hard to say. So I always say, if at any point in time we see any type of massive inflows coming into Bitcoin, then you want to err on CTM 2.0, my own personal opinion. But it's like the data shows very strongly pointing to, on the sell side, that CTMX is way superior than CTM 2.0. So you could, I focus on CTMX, but on the sell side, do your research, go over both, compare both on the sell side, and take a look and make sure that you are executing with what gives you the highest probability and what you're most comfortable with. So we got a little bit of a hedge going on over here. Cardano out of the market, and it's still, even though you're seeing off of the low, a nice move up, I could see it's getting, or has broken out from a discretionary trend line. We are still much closer to selling than we are to buying on Cardano. And Solana remains just completely in a sideways death trap, just since and as long as Bitcoin's been in it as well. It's better on the short side because it's filtering out a lot of false entries. You could go like this very quickly, and you could look, for example, if you were to go, we're from 2017 here to present, and if you take off the long trades, you could see that you have 105 with a 42% drawdown. I suppose that shows how important it is to trade both sides together. Look at the difference in drawdown when trading both. 30% drawdown compared to a 40% drawdown. CTM 2.0, 2017 to present, take off the long side, and you're not even positive. That's, something's wrong there. It says only 2 trades. No. I'm looking for a number of trades. 69. Wow. I'm at a loss. Someone help me out. Why is that happening? Rashad, I'm at a loss. Someone, please. So I don't know. It's very strange. Let me just try one thing, and I apologize for the lost momentum. This is pretty important. Let me go ahead and jump in over here, and let me get a clean copy of Ethereum on CTMX. So there's a little bit difference in performance, eh? So let me go ahead and check just the short side over here, and that looks a lot different. Let me pull up CTM 2.0 on the Ethereum buy and sell side. Let me go from 2017. Take off the long side. All right. So now we have the correct data. I'll have to, I don't know, Chris. I'll try and fix my charts. I don't know what, I never seen anything like that happen before. But bringing up the fresh charts, obviously fresh copies, you see that you're looking at on the short side on CTM 2.0, a 1,200% profit, 69 trades, 16% drawdown, compared to, it's not much of a difference, but it is filtering out, I guess, 8 trades, a difference of 8 trades. So the net profit is higher and the drawdown is lower. I mean, that again, CTM problems when you have so many strong candidates and strategies to work with through different assets and instruments. But for me, my own personal opinion, and that's why you have to go through whatever instrument you're trading with what strategy and really go over all of the historical data in every different period, to understand what it's like in a bull market, bear market, sideways market, become as familiar as possible. I always go through the list of trades. I look at how many losers in a row. For example, you have on the sell side over here, you have a percent profitable of 36%. And generally, all of our templates are generally between 35 and 45%. Some a little bit higher, but this is generally where we are. This is the short side. The short side is much more difficult to execute on than the buy side, obviously. And I look for, 6 out of 10 trades are going to be losers. 1, 2, 3, 4, 5, 6, and that's just the norm. Some people giving up, then boom, followed by the banger. But from my own personal opinion, and I spend all my time obviously like working with this, is that it's as clear as can be that CTMX on the sell side offers a distinct advantage because of the added filters built on top of CTM 2.0. It is difficult to say with a clear certainty which is better on the long side. I think CTMX is better. You will see certain trades at certain times filter out, but in the long run, unless you're going back to early history, 2012, 13, 14, it's hard to find a period where the advantage is to CTM 2.0. So let me go ahead and make sure that these are back to, look at the difference was obviously massive, right? And that's a work of art from 2017 on the buy and sell side. Since 2022, It's a work of art. And the time is going to, since the bear market followed by where we are today, when the bull of all bulls runs and it takes everything with it, we are going to see an expansionary portion of our strategies. So let me just go ahead and yes, we covered Tesla earlier. Go back to it in 1 second. We don't have a strategy on PLTR. So we're very focused. So what we do is a couple of things, right? What we do is on both the 8-hour time frame and the daily time frame, we have executable strategies on Bitcoin, Ethereum, Cardano, and Solana. And you can see here by looking at the green line is the account balance. The blue line is the all-time high intra-trade balance. And why they all seem like they're going up and to the right all the time, they're not. They're going sideways most often because it's a momentum-based strategy. And at different times, there's a rotation into a different asset. So by having an allocation between 2, 3, 4, it very much helps. And then we also have on the 8-hour time frame, I'm sorry, on the daily time frame on stocks. And we trade TQQQ, FNGU. I like both of those because they are basically ETNs that have variable allocations. What's performing best is going to be added, or what's performing worse removed in the long run. And then we also have Nvidia and Tesla. And same exact thing. Well, during the bear market of 2022, as buy side only, TQQQ and FNGU go sideways. You can see that both Nvidia and Tesla able to execute on the sell side as well. Tesla right now just took a stop loss on its last trade. It's just sitting here on the sidelines. If you ask me from a discretionary view, what's happening over here? Well, its relative weakness in 2024 is glaring and apparent, and it's too soon to say whether or not it's building a nice base. Ever since the top of the 2021 bull market, this has been consolidating sideways like this, and I would like to think it's getting ready for a mega massive SpaceX launch to the upside, but I don't know that. And that might be dependent on who wins the election, as Elon seems to have picked sides of who he wants to see. He, like, potential cabinet position, potential role in the government. So, and or what happens to the overall markets. If the markets go ahead and enter into any type of sell off, like apocalyptic sell off that some people are seeing about to take place, well, then Tesla's going to be under pressure and probably strongly to the downside because it has been relative weakness over here. So we also look at these things on the 1-hour time frame when it comes to stocks. So for stocks, we also have Nvidia, FNGU, and Tesla also executable on the 1-hour time frame. As far as MicroStrategy, it's very much on the list and in the works. MicroStrategy. So we are looking and like we move at an exponential rate. We're slow to make new adoptions though because our foundational solutions are highly elite, and but one of the things that I'm trying to direct the community towards is now spreading our focus into various stocks and desirable top 50 alts, right? So among those lists would be like, well, FNGD would be a big one for being able to attack on the short side. Maybe relooking and revisiting to see if we could do better on our 1-hour templates. But Bitcoin and Ethereum ETFs, as they continue to gain history in the future, we'll be able to develop some strong strategies. Bitcoin miners is something that I think would be a very good fit. Obviously, we have MicroStrategy here. And then we have the ultra semiconductors. And by the way, that's actually a good lead into. Oh, I wish I don't. I don't have the soundbite up to give. But what Aldo is working on here on the prototype V3, CTMX V3, which is adding a couple of new features. And on USD prototype, he's been able to improve both drawdown and net profit. And that said to me, well, that's inspiring to me to go ahead and upload all of our preferred CTMX templates over here, right? Across Bitcoin, Ethereum, Cardano, Solana, and also across TQQQ, NVIDIA, FNG, and go ahead and see and begin the progress on V3, because once those highly valued so again, that's small adjustments, something like moving stop loss to break even, a couple of other features like added, and being able just to make some small tweaks, having some sizable improvements. That's something that we're highly interested in. All right, everyone. So no, there. Oh, any chance, Brandon, of a strategy for LSE? Yeah, so UK residents are more along the lines of Tesla, Nvidia. Brandon, inside the Discord, inside the stocks channel, inside the stocks of the Discord, could you post that and also tag me? And could you, while you do that, like provide the list of the ones that like are worth just taking a reviewing, checking out, and seeing if there's anything there. So please do that inside the Discord. We'd be interested in that. All right, everyone. On your way out, yeah, there is progress, or not progress. What's in place is highly desirable already without even having progressed. So Hypernova, true to form. Remind me tomorrow, and then either by tomorrow's stream or tomorrow, I'll kick that up. And what I'll do is things that are desirable, I'll start uh keeping an open tabs, and then during our sessions, kind of just forward testing, and in that way also bringing it more to the forefront of the consciousness of myself and the community to get those things adopted. I don't have that specific yet. So that's trading off of the daily time frame or the 8 hour. So that might, I don't know if that's one of the alerts that would be put in, which it would be. It's a good question. And it would depend on what type of alert you're using, right? If you, so Michael, this is like, we're not there yet because we don't have, like, we're not releasing V3. So could we come back to that? Because that's actually, let me go ahead and do this. You don't need to come back to it. There we go. It's a great question. Thanks for being here. And that's something that is also progressing towards, working towards, and so that will be worked out. And if it's on the daily or 8 hour, we'll figure it out. Anyway, I'm not sure because we're not there yet, but that is something that we really need to get with the I dotted and the T crossed to make sure that we have that out. All right, everyone. We can always make more templates. So, I mean, it's that part is kind of easy. It's just that moving too quickly. I know, like Facebook, they kind of embraced like move quickly and break things because what they were trying to do was just simply gain as much adoption as possible. What we're trying to do is something that very few could do and is extraordinarily difficult, and that is conquer the markets. The solutions that we have in place that we consider foundational place us on the level playing field of the best and clearly anyone with the CTM knows that even better, right? So it's more about, we move quick, but we're not trying to break things. So it's a very, very, very delicate dance. And we do a really good job, I think. So we'll keep going. All right. That's why we're here every day putting the work in. Have a beautiful day, everyone. God bless you, and I'll see you all on the inside.